Hi, I'm Jared Graham, the founder and managing partner of 4K Asset Management. I wanted to start by helping you understand a little bit about the building blocks of a nice, well-structured portfolio if you're just starting out your investor journey. So when you first start investing, one of the things that you'll hear a lot about is a 60-40 portfolio. And that is what you'd hear from your financial advisors. It's what you're going to find when you start just looking at what should you invest in, how do you have a balanced portfolio. And what people are really talking about is equities and fixed income, which is another way of saying, you're buying stock, you're getting ownership, you're getting the upside and the capital appreciation when the companies grow on the equity piece. And then on the other side of that, you've got the fixed income where you're buying a bond, right? Buying a bond really means that you're investing in a loan. You're giving a loan to one of these large institutions or the government treasuries. You're figuring out a way to get a recurring stream of income rather than just putting it in and hoping that the company grows, right? You have some level of a guarantee that you're going to get paid first if something were to go wrong with the company, or you're just trusting the fact that these are, highly rated groups that have been paying their debts for a long time. So with those two things, you have what's called diversification, right? And even deeper than that, you want to diversify by not just buying into one equity. You don't only want NVIDIA. You don't only want Amazon. You want to buy a whole bunch of stocks. You don't want to just give one bond out. You want to buy a bunch of bonds, right? So you're trying to build a diverse portfolio and you want to balance it. And the balance is traditionally 60-40, right? Everybody tries to beat the market, and financial advisors that are advising the 60-40 just aren't doing it. So if you're trying to beat the market and the financial advisors who are advising the 60-40 isn't working, right? Because that's what everybody's doing. That is the market. What's the alternative? The institutions have already started making a shift into what's called alternative assets, right? They're alternative investments. And instead of doing 60-40 now, the advice that is coming around, kind of flowing from the top down from the institutions, is that you have a 50-30-20, right? So the 60 comes down to 50, 40 comes down to 30, and you take that 20% and you put it into alternatives. Then the question is, what are alternatives, right? Alternatives are private equity, private credit, private real estate. There are a lot of other things that you could look at, but really those are three of the main things that you're going to start seeing when you're looking into diversifying with the alternative asset investments. This additional diversification into these asset classes is one of the things that could drive some of the returns and reduce volatility. So in reality, it's not just that you want to beat the market, it's that you want to beat the market with having a reduced level of risk, reduced level of volatility. One of the things that you often hear in the news is about how people are planning for retirement, something goes wrong in the economy, and now all of their 401k is gone, right? So the diversification and being able to spread it, not just in the public markets where things are highly volatile, but into private markets, gives you a little bit additional balance and additional diversification that can help protect you in those downtimes, but can also help you start to beat the market and see better returns on a risk-adjusted basis. And that's really the goal, to beat the market and reduce risk.
This video is for educational and informational purposes only. It is not investment, financial, legal, tax, or accounting advice. Nothing in this video constitutes an offer to sell or a solicitation of an offer to buy any securities or investment product. Any offering, if made, will be made only through official offering documents and in accordance with applicable law. Any examples, projections, or assumptions are illustrative only and not guarantees of future performance. Past performance is not indicative of future results. Investing involves risk, including possible loss of principal. Real estate and private investments may be speculative and illiquid and may not be suitable for all investors. You should conduct your own due diligence and consult your own licensed advisors before making any investment decision. The presenter and affiliated entities may have financial interests in investments discussed. All information is provided as is with no warranties as to accuracy or completeness.